India imported 300 million ounces last year of silver. So when you talk about the entire COMEX having 300 million, of which 33 of it is registered or available for delivery, it lets you know just how thin the margins or the availability of product really is. So one of the things that they've been doing, they being the banks, the authorized participants, the commercial banks and the large hedge funds that have baskets worth of silver in SLV. In 2 days, an authorized participant took off somewhere in the neighborhood of 7.5 million ounces of silver. And I think it's very, very illuminating. In other words, price and rhetoric are the tools of misdirection that allow these authorized participants, or let's call them the people with the biggest pocketbooks closest to the information. They're draining COMEX, they're draining LME, they're draining SLV. They're finding ways to gather the real thing while the price, the suppressed price, enables them to do so in the cover of darkness without being ratted out, without being crowded out of their trade, because all of us see the immense value in silver. And it's because of the price suppression. The bottom line is the big money always front runs what's coming next. And you can see this is a form of front running. And I think it's important to note that when you take this metal out of wherever it's being held, this is a big deal, because at least in the case of the COMEX, it loses all liquidity from an industrial standpoint when it leaves the COMEX ecosystem. So where is this going? Who's taking it? Where are they moving it to? I don't know. It seems like everything's moving eastward. That I do believe. Just the other day, on January 11th, one trader took possession of 1,223 contracts of gold worth 230 million, and then 3 days later took another 505 contracts worth 96 million. Price, whether you're talking gold or silver or whatever commodity you're talking about that has been suppressed, that price is being used specifically to misdirect the public and allowing the biggest money in the world, the money closest to the information, the money that wants to de-dollarize and have tangibles in their possession. It's very telling that this money is grabbing at a massive rate from all of the main exchanges. You can even look at aluminum and zinc. We're down like 75 and 90% respectively off the LME. And a report just came out that said China holds 20% of the entire aluminum stockpiles in the world. So they're buying as much as they can from the exchanges while they will allow them to sell it, and using paper derivatives to suppress the price. Now, I should have asked my head trader this question, because I didn't know that I'd be on here with you, but I asked him the other day what it would cost for us to buy a 100-ounce gold contract, because I wanted to explain how they suppress stuff so easily. A bank like Bank of America, we have to have $6,900 in our margin account to control what amounted to $188,000 worth of gold. And so you're talking 27 times leverage that these institutions are able to create this perception of reality that is 27 times manipulated, or every dollar equates to $27 leverage. And so these banks have had free run on suppressing price and being able to do what they want. The caveat to all of this is what we are seeing happen with the drawdown on SLV and COMEX and the LBMA, where it's easy to suppress price when no one is taking away all of the inventory. But you try to suppress price and all of a sudden get requests or demand for delivery, it changes the whole backdrop. And I just have this feeling that we're getting much, much, much closer to that end game moment where these banks really don't have the desire to play in that risky of a situation where you're seeing huge requests for delivery and not enough silver to back up even remotely the amount of contracts that have been issued. And I think we're getting really close to that moment. Maybe it's the fact that we're seeing not as concentrated of a position amongst these big banks, and doing things like pulling it out of SLV instead of messing with COMEX contracts. But I also find it more bullish if you look at things from a contrarian point of view. Price is smashed, rhetoric is horrible, everyone thinks you shouldn't be buying it, yet the drawdowns, look, to pull silver off of the LBMA or the COMEX you have to be very sophisticated. It is not an easy thing to do. It's not like calling Miles Franklin to buy 1,000-ounce silver bar. Pulling off a contract is very in-depth. It's not easy to do. You're talking sophistication, wealth, and closest to the information. And when you see these record outflows and then see that India imported 300 million, questions, where did it come from? Yeah, a lot of it came from the Swiss refineries, but a lot of it came from the COMEX, a lot of it came from the LBMA, and probably some came out of share redemption out of SLV. The point of it is that it's getting harder to do that. But when it leaves, it loses all industrial liquidity. So it is never coming back. So when you see these delivery numbers, you should put an exclamation point after it. It's not just someone taking possession of metal. It's someone taking possession of metal in a form that the reason to keep it in this form is for the industrial liquidity. And you have just saying, I don't want that. I'm sending it somewhere else. And I think it really adds to the story when you look at it that way. So I'll tell you, it's maybe the most interesting environment I've ever seen in 33 years. I truly believe that people just wanted out of just get out of everyday craziness and go be with friends and family and let go. That coincided with the 2023 allocations of all the major mints being released. And in all of my career, I have never seen premiums cascade downward the way they have, ever. And I was caught off guard by this. I don't think it's anything structural or really meaningful in the scheme of things. I don't see it changing when you realize that less than 1% of the public has any gold and silver to their name. What this is a function of coincidence and of timing, where people unplugged for a month and all the allocations came in and demand dropped. The premiums on everything have come down considerably, except for Silver Eagles, which are still roughly $9.50 over the price of silver. And whatever their reason for being ridiculously underwhelming in what they're sending out and inefficient or whatever it is, it's startling, continually startling, because everything has come down to just above where it was in 2019. And in terms of availability, for the last 3 years, keeping product in stock has been next to impossible. As we see markets start to rattle with rates that keep edging higher, at some point as the economy slows down and this illusion of asset prices that have been blown sky high due to easy money and suppressed interest rates, when there is an equilibrium between asset prices and rising interest rates, when that moment happens, if I find it inconceivable that people won't wake up and say, my God, look at silver. It's still so cheap compared to everything else.